All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and this is your end of day market recap for the 30th of May, and May going out with a bit of a bang. Well, I'll read the risk disclaimer first, and then I'll give you my take on the price action. I'll get right to it. But everything that I'm going through in this video is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. I'll talk about, just kind of the price action and what we're seeing in terms of sectors. And but the other thing I want to know too is this just seems to be the case a lot of the times. And I've said that in these end of day videos that just the end of months, I particularly don't trade them well. I've tried to kind of sit out some of these end of months. I didn't really do that successfully, other than unwinding some trades last week, and just understanding that it might be more difficult. There's just a lot of moving parts. There's a lot of, it just seems like there's a lot of different moves at the end of the month, maybe some portfolio rebalancing. I don't really have all the reasons. I know traders like to understand and to have reasons, but sometimes it's better to know that like there's just a lot of moving around. Things don't make a lot of sense. There's a lot of false breakouts. And just the overall market doesn't act as well. And I also find that sometimes you'll see this when the first half of the month is very strong. I find that the second half of the month is weak, and then it's vice versa, because sometimes we don't always get the first half of the month. Sometimes it's the second half of the month that's strong. But you just kind of have to note that have perspective. Like, if you're newer to trading, or if you got fooled by some of these moves over the last week, you just kind of have to understand like that. If you're having a really good month and the market has been a bit easier and there's been a lot of good setups, it just normally doesn't carry through the whole month, right? And that's just something that kind of goes with perspective. So, one of the things I've talked about too, I talked about in yesterday's video too, is just try not to give back some of your profits from earlier in the month. That's kind of the goal. I know we all want to make money every day, but one of the hardest things to do that I find is to take a step back. There's just a lot of traps, and like, I got caught in some CrowdStrike today. I added to CrowdStrike today because I just didn't think it should be down as much, and the stock just sold off throughout the day. So I'm going to talk a little bit about the move in software. If you heard me in yesterday's video, now I didn't know Salesforce was going to continue to sell off, but my take is with the software group is, number one, it hasn't been acting well all year long. It's been a relative underperformer. And if you don't believe me, here's a chart of the IGV, the software ETF, and SPY, right? Since the beginning of the year, right, it kind of made a high in the beginning of February, and then it's just been really underperforming the overall market. And that's IGV versus SPY. You could look at this IGV versus Q, and I do like how TradingView allows you to do this, but it's the same thing. I mean, it's really been an underperforming group. And I will give you my take on this. I've given you my take. I gave you my take yesterday. There's just too many software companies out there. There's too many there's too many names that do the same thing, right? And I know like people really like some of these names, but you can't have like, in my opinion, it's saturated. You can't have 20 or 30 companies that are all doing very close to the same thing, right? And I think that's, Salesforce is a big company, and they try to acquire companies that are doing different things. And there's been a rumor about HubSpot and Google, and I know that there's been some option positioning in that too, but I really don't think that deal is going to happen. Now, I'll be shocked if it does happen, and I talked about like the call spread positioning in that, but why would Google want to spend that much money for probably something that they can create on their own, and not spend nearly as much money as what HubSpot has? Maybe HubSpot has some other thing that they're looking for. Sometimes we see that with acquisitions, is there some type of technology that they go like a piece of the technology that they like, and then they kind of don't really do much with the rest of the company. But I don't believe that rumor. I just think it's too much in terms of for what Google would have to pay for HubSpot. But hey, I'm not I'm not privy to any information. I know some people love the call activity above all else, but it's speculative, right? You might as well, like, a call spread, which we talked about in the trading room with HubSpot, is a lot cheaper than putting on an outright call play, and you could have taken profits in that trade the other day, right? So again, just to get a little bit off track, but this move, and I had talked about it when I was traveling. I said, hey, it's not a bad idea to maybe think about putting on that call spread, and you could have taken it off, right? I think it was trading up like well over 40% from just a couple days ago, and I think that the rumor was like there was like a Seeking Alpha article or something like that. So in any event, and it's kind of the same thing with the cyber companies too. And you kind of had just a perfect storm today in terms of software names, right? Here's the after hours, but here's the regular market, and here were the down moves today. You had Path down 34%. You had NTNX down 23%. Salesforce was down 19%. But so it really just, sometimes when it's one report, the market can shake it off, but there was a lot, right? And then on the other side, what's really interesting is, and I'm just going to move this to larger companies because there's too many names. But then you have all these retail companies, and I was making a joke yesterday in the room about how the consumer's not dead, right? Well, they're not dead, but they're still choosy, right? They're not going to Kohl's, and I can't remember when I've been stepped foot in the last time I've been in Kohl's, but I'm not really a fashion person either. So you wouldn't find me doing that. But some of the names are just not going to do well. But in retail, that seems to be how it always is. There's always some hot stocks in hot trendy stocks. This is all what I spoke about, I think, in yesterday's video too. But if you look at now what's moving here after hours, you've got Gap up 20%. You've got Ulta up 11%, and I think that just the results were not as bad as they expected. The other thing that I would remind you of too, and again, I'm trying to help. I'm not trying to say anything negative, but a lot of times earnings reports are, say it with me, please, buy the rumor and sell the news. So if a stock goes up 50% into their earnings report, right, and you're waiting to see if you think that that they're going to have a strong earnings report, and then the stock's going to go up further, that's a lot of times that's not how trading works. Now there's outliers, and Nvidia was an exceptional report, right, and a very exceptional report, and the stock obviously went up after that. But that's not how the majority of cases happen. If something goes up 20, 30, 40% from the last quarter, right, they're going to have an amazing quarter, right? And I know some people are looking at the Dell earnings, right, and they're saying, oh, I don't get it. Dell had good earnings. Well, it's because the stock's up. I think the stock's up 60% or something like that from the last quarter, right? And so again, that's buy the rumor, sell the news, right? So, and it's the same thing with Costco too. So we could kind of look to see where these things are trading a little bit, but it's just something that you learn over time. Now this is starting to pick up some speed to the downside and has broken through the value area here. So you've got a little bit more selling picking up. Perhaps the guidance wasn't as strong as what they're looking for. But again, you need to have just exceptional numbers. And again, that's one of the biggest principles that you'll hear me say in these videos over and over is buy the rumor and sell the news. So you get a run up into earnings, right? You take it and you put it in your pocket. Right? You don't mess around, and that's what I did today with Costco. I think Costco's trading down a little bit, but I sold my Costco today. The last piece of it, close to the highs of the day, and because you don't know what Costco is going to report. And if you go back to Costco last time around, right? This was last time it did the same thing, and it sold off, right, on earnings. And again, there wasn't anything negative about Costco last quarter. It's just the fact that look at what it did, right? It ran up majorly and got majorly overbought, So kind of the same thing. So I took my position off, and we'll see if it comes in. And then, notice it went sideways for 2 months, and then it began to pick up speed again. So, that's the whole thing. And that's trading 101, is because I don't think Costco had a bad earnings report. They just run up too much, right? And let it reset. And then you can kind of pick shares up a little bit after people forget about it, right? But the hype and so forth that goes into some of these earnings reports, it's it is what it is. I'll move on. I feel like I could talk longer about that. Other things that, obviously happened today. I talked a lot yesterday about what interest rates have been doing. Well, I thought it might happen on Friday with the PCE deflator. We're going to get that report tomorrow at 8:30, but it was actually today, and just on some economics that weren't as strong as expected. And, look at what happened. Bonds really rallied today, up 1%, and it takes the small caps with it. And then, like I said, when interest rates are going higher, right, the small caps tend to underperform and Qs are outperforming. So today was the opposite, right? You had bonds rally, rates go down, and small caps go up, and tech gets sold, right? So that's the world that we're living in. And especially this will tend to pick up when there's volatility in the bond market. So you've got month end, which is, to me, always a hassle, especially when there's been a strong month. And then you've got some bond volatility going up too. So, but bottom line is, so somebody asked me today on Twitter, and they're good questions. They're like, because there's housing data today which was not good. And they're like, geez, how are the home builders up today? It's because, well, that's old information. You have to be forward looking, right? And you have to think about, well, what's going to spur more people to buy houses, right? And, going forward, it's interest rates going down. So when bonds rally and interest rates go down, automatically the home builders are going to go up, because that should help drive demand, essentially making houses a little bit cheaper because of the financing. It doesn't, sometimes it's not always one for one like that, but when a group has been hit pretty hard, right? And that's the same thing with the banks today too. They're going to rally based on what interest rates are going to do. The solar group, pretty amazing. This has caught me for a surprise. And, I guess, some of the story has been with solar is that, we're looking, everyone's looking for ways, better ways to basically, have cheaper energy, I guess, right? Or to be able to have energy for some issues. So that's why in my opinion, why solar is getting a boost. And it's above the 200-day moving average. We talked about this setup in the trading room just the other day. And I said, hey, if you like solar, you could just trade the ETF and go long versus the 200-day moving average. Keep it simple. And there's resistance up there at 55. That's about a 13% move higher. So, that's very interesting. Also, utilities were strong today, right? And, this bounced right at the 20-day moving average. Again, not exciting, but this was one of our setups going into this week, was AES, and that made a move out to highs. And by the way, when you look at sectors, right, you don't have a lot, right? We've talked about how poor the breadth is. Usually that's a warning sign. I think the warning sign played out, right? I think that Nvidia's earnings got right in the middle of the market breaking down, right, and caused all the AI stocks to momentarily go up. But I think the writing was on the wall. Breadth was starting to really look bad going into that earnings report. So you've got a lot more red on the screen down here, right? This is my sector momentum sheet. There are a couple areas that are showing some relative strength. The XRT has been, these moves that are happening besides Coles. Here's what XRT is doing. Again, it's not a great looking chart, but it's above all these short-term moving averages, and that's why it's showing some strength, right? And that's retail. And ANF, I traded a little bit of ANF today, which worked a little bit. I also, also this gap move after hours, they're continuing. So again, it's picky and choosy. And there's another big move by Gap. I traded some Levi's today. Look at Levi's is still going in the after hours. Looks like a VPOC has been taken out, so I could take profits, I guess, if I want to after hours. So you kind of have to mix the good with the bad, but understand that overall the market is pretty troubled. CrowdStrike, I mentioned I got caught in a trade today. I just didn't think it should be down that much. Let's see what it does. There's a VPOC, 1 hour VPOC that was taken out. Notice you could see on this is so you could see multiple value areas on one screen. That's the new enhancement that we made for TradingView, and downside VPOC being taken out here on the 1 hour chart. But it's got to get back above the value area, which is right around like 321. And we'll see. But yeah. So that's where this looks. So again, you could see it a little bit more clearly, but would like to see it stay above 321 and maybe recoup some of this, going into earnings. That's what I'm looking for. All right, guys, that's it for the recap. Again, it is what it is. Write down that these end of months are a lot of, again, nothing's 100% of the time, but a lot of times these end of months, I end up giving back, a little bit of gains for the month. And I've done a little bit of that, the last couple of days too. Not horrible, but not good. You live to fight another day. Have a great night, everybody.